Hi everyone, let's go over my macro and high time frame bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the macro bullish scenario where we are looking for a finished 5-wave structure to the upside in a wave 1, followed by already a finished wave 2 and now looking for new all-time highs. In this scenario, you can see that this wave 2 ended above the 0.5 Fibonacci and just before the 0.382 Fib time, both taken from the low over here to the all-time high. And this is something you don't really want to see for a wave 2 because most commonly a wave 2 ends between the 0.5 and the 786 Fibonacci and also behind and after the 0.382 Fib time. So that is not preferable for this scenario where we are then looking for new highs to come. Now the 382 Fibonacci is a rare target for a wave 2 and that one of course has been hit, and ending before the 0.382 is not impossible, but talking about probabilities, this is not really what you want to see in the bullish scenario. If we go to the macro bearish scenario, we're looking for the same move to the upside, but now we're looking for a 3-wave structure to the downside. Currently still working on a 3-wave move over here, after which we then expect a continuation down, looking for the support area between 11K and 8K. Now if we zoom in to this move to the upside over here, we're looking for a zigzag impulse to the upside in A, 3-wave corrective structure in B, and then eventually another C to the upside, where very important support for Bitcoin is between the golden pocket and the 786, taken from the high to the low over here. The 618 at 39K is in confluence with the point of control of this volume profile, and the 786 is in confluence with the value area high. So the area between 39K as well as 50K, which is the area of the 0.786, is very important resistance for price. Now, if we look towards the downside, a great support area for Bitcoin is between 11 and 8K, consisting of the golden pocket over here, taken from the low to the all-time high, as well as the value area high of this multi-year volume profile. And also, if we have price moving towards the upside just a little bit further inside of this area and rejecting over here, then the most common target area for a wave C or a wave Y to the downside, at least in a 3-wave structure, is between the 1 and the 1.236, which is then also in confluence with the golden pocket and the value area high of this multi-year volume profile. If we then go to the high time frame scenario, switch to the daily, put logarithmic off and go back to the linear chart, then what you can see over here is a scenario where the low is already in and we are looking for price to continue to the upside. So over here we then have a wave A or a wave 1, a first impulsive structure to the upside, followed by a 3-wave corrective structure to finish wave 2 or B, looking for continuation. Now you can see that the low over here has been made after the 1-to-1 taken from the low to the high of A or 1, which is nice, that's fine. And now you expect an impulsive structure to the upside, where if we're looking for the targets of wave C, then the targets of C are between 40.4K and 44K, which, as you know, is an important area because of the golden pocket on the macro. And also for a wave 3, the target, the minimum target, would be the 1.618, which is sitting at 50K. However, we also know the 1.618 is still a target for a wave C as well. The 1.618 is a minimum target usually for a wave 3, but it's also still a target for a wave C. So as you can see, wave C, 40 to 4K to basically 50K is again an important area of resistance on the macro, but also for potential target of wave C for a move down. And you really want to see this level being broken impulsively with volume, strong market structure to the upside to look for higher prices, as usually a wave 3 is very extended and can go to the 2.618, 3.618 and even higher. Now what you also see here is that price bounced on the 0.382, taken from the low to the high of A or 1. And as explained on the macro, the same here, the 0.382 is a rare target for a wave 2 and a more common target for a wave B. So based on probabilities of just this Fibonacci alone, probabilities increase a move up would be a wave C compared to a wave 3. Of course, the 0.382 is still a target for a wave 2, right? It's just less common. So we have to observe how this move then to the upside forms to then estimate the probabilities of, is it a wave C or is it a wave 3? And in general, a wave 3, very impulsive, a market structure like this, more parabolic, and you want to see volume increasing as well. And a wave C tends to be a bit more lazy towards the upside. If we then over here look at this second scenario, the pivot of wave A or 1 changed over here. So now the high over here is on this second pivot, the second time that 31K got hit, A or 1, from the low to the high, A or 1, looking for B or 2, and then a bigger 3-wave zigzag structure to the downside, as you see in my daily updates as well. Now, in this particular scenario, we haven't yet passed the 0.382 fib time taken from the low to the high of A or 1, which for a corrective structure is usually a minimum fib time, and the 0.382 is positioned on Tuesday, the 10th of October. So after the 10th of October, you want then a low to be made, lower prices, where the 0.5 to the 786 is an important target area for a wave 2, which is between 23.6K, which by the way is the low of the buy wick as well over here, and the 786 at 19K. Not to forget that for a wave B, all of these fibs are also common. So if price is bouncing in this area and we find continuation to the upside, we still are unknown if it's going to be a wave C or a wave 3. That really depends on the market structure we get towards the upside. Now, in this area, we do have some nice additional support. So if price does move towards the downside, the first target box I have here is between 21.8, 22.6, a little bit lower, just below the golden pocket, 20.2 to 20.6, and right on top of the 786, we have 18.7 and 19.1. So those are some interesting levels for if price is moving towards the downside. And if we then look at the probabilities of the different scenarios, then I have to find my box. There it is. So from the different scenarios, if we go to the macro scenarios, then at the moment the probabilities are higher in both cases to look for a move towards the upside. Because if I just compare the two scenarios again on the chart, both of the macro scenarios, both bearish and bullish, we are expecting higher prices still to come. In the bullish scenario, we of course want to see continuation, while in the bearish scenario, you're looking for that 39K to 50K area, look for rejection for another move towards the downside. So in the quote-unquote short term, nothing really changes. We're looking for a move to the upside, but then in this area, that is where it really matters. If you go to the daily time frame, however, currently the higher probability scenario based on Elliott waves and also my daily updates that I do is that we will find another low, because currently over here, this move to the upside does not look too great considering the bullish scenarios. In an impulsive structure, that's not great. A diagonal as well as a double 1-2-1-2. More information about this particular structure is shared in my daily updates, like the lower time frame updates, like today as well. We went over this structure and explained why the scenario or why the probabilities are for another move towards the downside, where we also have the double bottom over here. Bybit already wicked this low once, which increases probabilities that other charts will follow. But from an Elliott wave perspective, this move to the upside over here does not look great for the bullish scenario. Now, I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.